The S&P saw a flat trading session on Friday, down 0.01%, closing at 6296.79. Friday was the July monthly OpEx session, and it was a relatively quiet session. You can see almost no movement here on the chart. Overall, since the beginning of July, we've been in this consolidation zone between 6,300 and 6,200 on the downside. It did look like we were attempting to break out of that zone, trading a little bit above 6,300. So we're going to continue to watch that key level, basically right at 6,314. If we zoom in on the chart, you can see this was essentially the open. So we basically opened up around 6,314 and sold off thereafter. And so I'll be watching to see if Monday and Tuesday there is a continuation through that level into the upper gamma exposure concentrations at some of these higher strikes. First off at 6,350, that's going to be our first target if we can break above this 6,315 level. Zooming out to our daily candlestick chart, we can better see the gamma exposure structure, and it continues to be skewed higher. This has been going on now since the market broke out during the end of April. We've been trading above this 50-period EMA, which is this red line, and we're getting pretty far extended above it. The 50-day EMA is sitting at 60.44, so we're trading nearly 250 points above that 50-day EMA. So that's a very wide range there. So let's take a look at our gamma exposure data graph. Now, what I'm primarily looking at heading into this August OPEX cycle is a flip into negative gamma exposure. We have been in positive gamma exposure territory for the last 2 or 3 months, basically since the end of April. You can see current gamma exposure 950 million. That places us well into buy the dip territory. So we would be monitoring this gauge for a flip back into negative gamma exposure territory, and we would want to see a sustained move like 2 or 3 closes in negative gamma exposure to signal that a shift is underway, and a potential pullback into that 6,000 to 6,100 level could be heading next. If we look at the current structure, however, you can see most of the net gamma exposure is positively skewed. Very little net negative gamma exposure between 6,000 and 6,200. So this is kind of our pullback zone if we do see a flip into negative gamma exposure territory, and that would likely come below our zero gamma exposure line at 6,250. However, as long as we remain in positive gamma exposure territory, so on this side of our gauge, as long as we remain in this area, we're going to be looking for a continuation move to these higher strikes. So over the next several weeks, we would be looking for a move to 6,400 or potentially 6,500 into September. And we are discussing these major gamma exposure levels, analyzing the data behind it, as well as trading the markets every single trading session. You can check out our community Discord to get a sense of what's going on. That's absolutely free. I'll put a link in the description below. Next, let's take a look at IWM, the small caps ETF. On Friday, we were actually down 0.71%, closing at 222.33. We've been noting in our live stream as well as in our community Discord the big gamma exposure at the 230 strike. That's been sitting there for the past week as we've been consolidating between 225 and 220. So we're going to look for a potential breakout move above this 225 level in the next week or two for a move through this 230 level. Small caps have been the catch-up trade, and we still have not hit recent highs above the 240 to 245 zone. So the possibility for a breakout move to the 230 strike and potentially up to the 240 strike, I think, is increasing as long as we see a continuation of positioning into these higher strikes. That's what we're going to be monitoring for our first tell. We want to see a breakout of this zone. We want to see this uptrend continuing as well as more positioning at these higher strikes. So we're going to continue monitoring this as well for a potential trade in our options portfolio. Next, let's take a look at the VIX, the volatility index, down 0.67%, closing at 1641. The last 3 or 4 weeks, gamma exposure on VIX options has been concentrated at the 16 and the 17 strikes. We continue to see that, and that's basically helped keep volatility right around this 16 to 17 range. Of course, we do see volume in the options market at some of these higher strikes. Obviously, a lot of investors are using these calls as a potential hedge in their portfolio, but as of now, the gamma exposure is still concentrated at these lower strikes, just showing that vol sellers continue to remain in control and the gamma exposure continues to remain negatively skewed. And so I think we would need to see a breakout above the 18 to 19 level. That could signify a potential breakout to further upside volatility. We've seen a few little blips above this 50-day EMA on the volatility index, but nothing sustained. And that's what we want to see first of all, before we really see a market correction start to unfold. We want to see a movement of the volatility index above these 18 and 19 strikes. And we also want to simultaneously see the S&P breaking down out of its current consolidation zone. Next, let's take a look at a couple of names that we are actively trading and watching. The first is AMD. On Friday, it was down 2.13%, closing just below 157. We're looking for another long entry into AMD. What I'm waiting for is a pullback. You see, we've reached this upper dealer cluster zone at 160. And although we do see gamma exposure very positively skewed, we would like to wait for a pullback, potentially filling this gap around the 145 to 150 zone. If we could get a move back up into that zone, even just a couple of days from now, the 50-day period moving average would likely be all the way up to 140 at that point. And so this would not be so stretched. And so if that does occur, we'll be looking for a swing trade, potentially moving up, potentially the 165 and 170 zone. You can see gamma exposure is building at those levels. So that's something we'd be looking for. If there is any weakness into this week or the following week, that could potentially be an August OpEx play for an AMD move up into those higher gamma exposure concentrations. Same thing with Palantir. Palantir saw some weakness on Friday. We haven't seen very many days like this over the last couple of weeks, but we did pull back below the 154 level at the close on Friday, and I'd like to see a close below 150, potentially retesting this prior resistance, now turned potential support. And so if we could get a few dollars retracement further below 150, that'd be an excellent trade to the upside, back up through the 160 gamma exposure level. You know, a lot of these names feel like they're up here in nosebleed territory, but as long as the trend remains intact, we want to continue trading with the momentum of the market and following the gamma exposure data. And so we'll look for minor retracements within the overall larger uptrends. And as long as those hold in positive gamma exposure territory, those represent fairly high probability setups. And we are running a limited time promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We do have a few spots remaining, but we are wrapping this promotion up soon, so take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. Our Discord community's got a ton of great traders in there sharing their own trade setups, and you can also track our trades in real time as we manage our options portfolio. I'll put a link for all of that in the description below so you guys can check that out when you get a chance. Thanks so much everybody for watching, and we'll see you guys in the next video.